and welcome to BloombergQuint. Mahindra Holidays and Resort has reported Q3 FY20 numbers, even as the top line growth has been muted for the quarter, but then the operational performance has clocked a healthy growth out there. Joining us to talk about the quarter gone by and the way forward is the MD and CEO of the company, Mr. Kawinder Singh. Hello and welcome to BloombergQuint, sir. Sir, I'm going to start off by asking you about your top line growth. That seems to be a little muted, but sir, if you look at the operational performance, we've seen a 14% uptick there. What explains the reason here?
So, if you really look at our performance, as you know that we are in a vacation ownership business, we add members, we have resorts, and the resorts have turned in a very healthy performance with 14% increase in revenues on a YOY basis. Our profit before tax margins are up by about 104 basis points. And if you look at our resort occupancies, they were at a healthy 83.9%, which is up by 2% over the same period last year. If you look at our member additions, they have been stable at 3805, and given the economic situation at the country level on the discretionary products, we believe this is a very, very good member addition. And if you really look at our total profit after tax growth, it is up by about 17.5%. So all in all, a very good performance for the quarter. Even our material subsidiary has turned in good numbers. We have seen that at the operating level, EBITDA has grown by about 28% from 0.9 million euros to 1.2 million euros. So we believe that this quarter has turned out well for us.
Okay, I'm going to take that up in that case, the segmental revenue out here, because the income from club resorts, that's declined 8% year-on-year basis. Could you explain the reason for the same, and what's the outlook for this segment going forward in Q4 and FY21?
So at the holiday club business, a slightly different business model from our business, and this quarter they have delivered a 41 million euros turnover. It's slightly lower than the last year because they have two business segments. There is spa hotel segment and there is also a timeshare segment. The timeshare segment has been lower than the last year, but the spa hotel segment has grown by about 9.5% on a YOY basis. So even if you were to look at the performance at a consolidated level, at the operating level EBITDA, if you were to see, we have delivered a extremely good performance from 26 crores last year, excluding the Forex as well as the 116 related impact, which is an accounting impact. Last year we had a figure of 26 crore. We are up to 31 crores, which is about 16.5% growth. And if you look at YTD levels, 38.5 crores up to 95 crores on a YTD level on a consolidated basis. So the holiday club business is doing well. We are looking at a very good quarter in Q4. This is their best quarter because in Jan, Feb, March there is Northern Lights, there is winter tourism, and that is what this quarter turns out to be the best quarter typically for the holiday club resorts. So seasonally we are getting into a great season for the holiday club resorts in this quarter.
Sure, I was just going to take that up next, talking about your occupancy rates for the quarter, what's driving the demand, and also what can be expected now, if you could put a number to Q4 and the next fiscal when it comes to occupancy rates.
So in terms of occupancy rates, the seasonally Q3 is a good quarter, so we delivered 84% occupancy. A year round typically we deliver about 84-85%, so I see occupancies remaining stable. Domestic tourism is going to grow, as you can see the slew of measures announced by the government. So we are a domestic tourism place, so we believe that we are in good position in the coming times ahead.
And talk about your member additions for that matter, which on standalone basis for the quarter stood at around 3,805. Can we expect the number to go northward in Q4? That is a better picture than what we've seen in quarter 3. How has the trend been shaping up until now?
So as far as Q4 is concerned, traditionally it's a good quarter for us in terms of member addition. So we expect that trend to continue.
And how about the Forex adjustment for this quarter, sir? If you could explain that adjustment to us for this quarter, and also a little bit about the stress asset, because last time you said that you were keen to acquire some stressed assets across country, including Kashmir. So your take on that? Have we finalized upon something as of now?
So as far as the Forex adjustment is concerned, as you know, that the rupee has depreciated compared to the euro. So this is what gets reflected in the profits as an adverse entry, and you must note that this is only an accounting entry, because for us there is really no Forex loss, because our underlying assets are in Europe, and all the loans that we have taken to finance the acquisition are also overseas loan. So since the assets are in Europe, since the loans are in Europe, this movement is only a translation movement, Forex translation movement that you see. So it is not really a loss, but it is an accounting way of showing the movement. And therefore, this is not something that should concern us. Coming back to your question of the fact that we are looking into the next quarter with optimism, whether it is in terms of member additions, whether it is in terms of occupancies, and we believe that the budget has actually really laid the ground for the looking at domestic tourism with a lot of optimism.
All right, so we'll leave it at that. Thank you so much for taking out the time and speaking to BloombergQuint.
Thank you.